So you're pitching a VC, and the VC says, have you thought about raising venture debt? If you want to know the answer to this, stick with me now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
So what do they mean? Venture debt is a lesser known vehicle for raising funds. It's basically debt, but available for startups. And it's only available around Series A when you've been generating revenue. The venture debt funds will even look at you. Venture debt has a lower cost of capital than VC money. It ranks near the top of your capital structure. So if shit happens and you actually have some assets to sell, then this debt will be the first to be paid back. They charge you a high investment rate or interest rate, say 12, 15, maybe even slightly more percent, depending, and then warrants of about the same amount of top, which is sort of like options, but they're kind of longer dated and they can kind of convert into equity. So it's like a sweetener so that they can make a little bit of extra money. Think about it like you're getting a mortgage for your house, right? Go talk to lots of different VD houses and shop for the best deal. The truth is the main criteria for venture debts to invest is the quality of the investor who's leading around. Venture debt investors do not want to lose money. So the theory is if you've got a great investor, they're not going to let you die, which is not actually entirely true. If you're a seed stage company, then this is a pretty stupid question. If you're at Series B and you have not mentioned that you're raising venture debt, then it's a great learning opportunity. It should also imply that the investor is starting to think about how to put this round together, and that's a positive sign. It is debt though, so you do need to pay it back. One of the big benefits of that is that you can increase the total raise by around 25% and take less dilution. So what do you need to say? I'm sorry, I don't know that much about venture debt. I can remember reading about someone getting some in Pando the other day, but I obviously wasn't really paying attention. I presume it's a bit like debt, but for startups. Well, look, we're open to anything that would optimize a capital structure. And if you lead, it would be fab if we could discuss it. And maybe you could perhaps introduce me to some of those guys like SVB and Krios, who are the big players in the venture debt scene. Alternatively, yes, we're talking to 3 firms already. They're waiting for a term sheet before they proceed to DD. As usual, they've offered us a soft term sheet for 20% of the round on top. And so, if we get the deal done, we have that to, sweeten the size of the round. I hope it's really valuable, guys. If you want to learn more about me, head over to alexanderjarvis.com and I'd love to have a chat.